Hubert Centers and I are going to be presenting today about the ORBs trading indicator, which is a powerful way to approach trading. Morgan, great to be here today. Thanks for having us. And with everybody's permission, I'm going to go ahead and dive right in here. All right. Now, let me tell you a little bit about the background of this indicator, this trading tool. Hubert and I were watching from a distance. Another company came out with a very similar strategy to the ORBs Opening Range Breakout Strategy that you're going to see today. And Hubert will tell you more about this, but the story goes, it was fascinating for us to watch it because it was one of those innovative ideas that we wanted to really see traders use and use effectively over time. It was with a company called Compass FX, and they rolled out an indicator called DOTS. And so we watched, and a lot of people seem to really enjoy it, and the Compass FX has the benefit of actually seeing if people are actually making money in their accounts, and lo and behold, people were actually making money in their accounts as well from what we were told. So it seemed to be widely accepted in their network of users and traders, and that piqued our interest. They gave us permission to create something similar, and we actually added an additional tool within ours as well. And that's what we now call the Opening Range Breakout Strategy. So that's what we're going to be talking about today. It's a very interesting way to trade the markets. Before I get into the presentation, let me just go over the standard risk disclaimers. Trading or investing carries a high level of risk, and it is not suitable for all people. We want to make sure that you are not trading with money that you can't afford to lose. The reality is trading can be challenging, and when you trade, you expose your money to risk. So make sure that you are trading with capital you can afford to lose. Obviously, we're working hard to try to win and make money in the markets, but that's still important to understand. CFTC Rule 4.41, I will be showing you some simulated performance results, and it's important to understand that despite our best efforts, these results do have limitations. They were applied to a specific period of time. We obviously don't have a guarantee that the next period of time is going to be as good. It may be better. It may not be as good as the results you see right here. So it's important to understand that any hypothetical results do have their limitations. Now, it's my privilege to introduce Hubert Centers. Hubert has been a good friend of mine for a period of time. He is a very widely known speaker at industry events around the United States and the world as well, and has been featured on many of the Hubert and his experts have been featured on many of the popular news channels and financial news networks. Hubert's a great guy. I've really enjoyed knowing him. He's known probably more than anything as being a straight shooter. So if you ask Hubert a question, you will get an honest answer, and most people find that refreshing. Now, my background is really coming from the hedge fund space. I worked in the hedge fund space for about 20 years. I was blessed to be a part of some award-winning teams who we were able to win 2-star search awards, and also a group of top new managers as well with Futures Magazine back in 1998. I'm probably most noted for developing the value charts tools at valuecharts.com and introducing a tool that's designed to reveal the objective market valuation. So that's my background more or less. Let's dive into the subject matter at hand. Now, when we talk about trading, we want to have a roadmap or a strategy or some sort of methodology that we can rely upon when making our trading decisions. And the ORBs was really designed for exactly that. A lot of traders struggle with where to get into a market, where to place their stops, where to get out of trades, where to take profits. And that's exactly why we developed the ORBs indicator. So Hubert and I saw Compass FX have a lot of success with DOTS. We decided to develop the ORBs indicator. And we've actually added a powerful trend filter as well, and we'll show you how that works here in a minute. But the ORBs, the idea behind the ORBs strategy is that when you walk into the trading day, right when the market opens up, you have a trading strategy. You have a roadmap that shows you where to buy or sell depending on the bias that you have or the direction you want to trade in. So this, ORBs stands for Opening Range Breakout Strategy, and this is an indicator you apply to charts. Now, traders need a game plan before the trading day. One of the main reasons that I believe new traders fail is because they don't apply a consistent way of trading the markets each and every day. And this is where ORBs can be so powerful. It comes in, and regardless of the market, whether you trade stocks, forex, markets, futures, etc., ORBs provides a strategy for trading that market, and I'll show you exactly what that involves here in a minute. But the power of that is the consistency that it applies day in and day out for new traders, and also the ability to define where stop loss levels are and where exit levels are as well. Now, the ORBs basically is going to be a indicator that has a total of 8 lines. I'm going to show you how these work here in a second. But basically, there's going to be 5 or 4 buy lines, if you will, relating to the buy signal. There's a buy entry signal. There's a stop loss. If you buy, then you have a stop loss level knowing where you're going to limit your losses. You have a profit target number 1, and you have a profit target number 2, all on the buy side of the equation. Now, on the sell side, you have the exact same thing, equal and opposite. Basically, the sell entry level, the market has to reach the buy entry and the sell entry, and you're going to see that here in a minute on a chart. You have your stop loss level. And obviously, we know as traders, not every trade is going to be a winner, so that's defined going into the trading day. You have the ability to take partial or all profits at profit target number 1 if the market reaches down there on the short side, or profit target number 2. So that's how it works. It's a total of 8 lines, making it very easy for you to understand where to enter and where to exit your trades. Now, here's how the rules work. The basic idea behind this is the ORBs indicator levels are determined at the open of the session and not before. So we need our first opening tick to understand where we're going to plot our long and short entry levels. And here again, you're going to see this graphically. I'm going to go ahead and answer questions here at the end, so just bear with me here. I want to make sure we have time to get through all of the content. But the idea here is that once we have the opening price, all 8 levels are plotted on our screen, our chart. So we want to enter at a buy level to break out. So if the market rallies up to our buy level, we have the option to take a long position, or if we have a short bias or a bear market bias, then we can initiate a short position at the sell level. It's very, very simple. If we get in at the buy level, then we have the exit stop loss level defined for us. And below the stop on the buy side and the sell side, we have a sell exit stop loss level defined for us above our entry level. Obviously, going short, our stop will be above where we enter the market. Now, we want to consider taking partial or full profits at profit target number 1. And this really depends on how bullish you are in the market, if you're a buyer, or a bearish if you're a seller. So if you believe that the market has a lot of potential, you may opt to take most of your profits at profit target number 2. It's important to understand that there's no guarantee that the market is actually going to achieve these profit target levels. So it's really, obviously, everything relating to trading has to do with probabilities, and it's really a matter of how certain or how strongly you feel that a market has the trending or follow through strength to reach the different profit target levels, 1 versus 2 especially. Now, some people have actually added an additional rule here which says that you can get in, for example, on the buy side, hit your profit target number 1 and get out of your trade, take your profits. If the market comes back down below your buy line, then you have the opportunity to buy again if the market goes back up and hits your buy line again. And then again, same rules. You'd have the opportunity to take profits at profit target number 1 or 2, or if the trade goes against you, you'd have your stop loss level defined as well. Now, where this really becomes powerful, and I think Hubert's going to touch on this, is introducing filters into the equation, or introducing a bias in the mix. One of the things that I experimented with recently was actually using daily candlestick patterns as a filter to determine the bias for the upcoming session. So if I had a piercing pattern and I thought that the next session was going to be bullish, for example, then I would be looking to take buy signals only. Or if I had a trend following indicator, I could be only looking to participate on the buy side. So that's essentially how that works. All right, this is what the lines look like on your chart. So notice how as soon as the market opens here, this is an example of the Forex market, the euro currency, and as soon as we have an opening price here, then we plot our 8 different lines here. Notice that we have 3 green buy lines here. The bottom lower buy line is our entry. That's our buy entry, and you see that labeled right here. If prices rally up here, and if we're inclined to take a long signal, we could actually choose to enter right there. Now notice in this particular example that we would enter here, and then this dark blue line at the bottom is our sell stop for a long position. So we actually go down and hit that. Not all trades will be winners. We know that as traders. But the interesting thing is it held the opening price range, and it went back up and hit our buy line again. We can get long again here. And then ultimately it ends up achieving profitability by hitting profit target number 1 on the long side, and then profit target number 2 eventually to the upside as well. So that's essentially an example of where you would have been stopped out if you decide to take another buy signal. Your second signal becomes successful either by exiting at the profit target number 1 or profit target number 2. And here's how this looks with the labels here. So essentially your buy entry level, profit target number 1, and then profit target number 2. And you have the flexibility as a trader to determine how bullish you are, whether you want to take part or all of your profits at the lowest profit target, or if you want to hold for gross, risking the fact that it may not even reach your top target. But if you feel very strongly that the market has legs under it, then you may want to hold out and exit your position at profit target number 2 if it actually goes up and achieves that level. Okay, let's look at an opposite case here. Now, again, these lines are not going to be plotted until the market opens. So once we have that opening price here, again on the euro currency, then we have the ability to take trades after that. Now you can see that in this particular day, this is a daily session we're looking at, and these are intraday price bars. We see a sell-off here, and the market immediately goes down and hits our sell target number 1 right here. So we are short the market if we want to, if we're bearish, if we have a filter that says there's potential on the downside. And you can see that prices really fall off fairly quickly. We hit profit target number 1 if we want to get out of all or part of our position. And then again, we hit profit target number 2 in this example. Now again, there's no certainty here if we get into a long or short position that we're going to actually achieve our profit targets. But the interesting thing is that we found people using this consistently at Compass FX were having a lot of success with it. They felt good about this because this was a great way to have a strategy in place when you walk into the trading day. You don't have to wonder where you're going to get into a market. This is all mapped out for you, and these levels are actually the result of statistical volatility calculations that position these entry and exit levels and stop levels at the most effective places over time with a great deal of study, where we believe that the entry is most likely on the short side again here going to achieve profitability. But obviously there's no guarantee of that either on the long side or the short side. So again here the labels, short entry right here, sell entry line, and as we see the market tail off right after the market opens, then we have sell target number 1 and then sell target number 2. And again, you have the flexibility as a trader to take part or all of your profits at target number 1, and then you have the ability to take them all off at profit target number 2. Now let's take a look at another example here. This is an example where the euro just basically opened up, traded sideways for a bit of time, and didn't immediately go down after it hit profit or the sell entry level. So we hit the sell entry level and traded sideways for a bit, and then we see the market just fell out of bed. And this can happen. So we really don't know when these targets are going to be achieved or if they're going to be achieved in the session, but obviously with designing the ORB strategy, our desire and our expectation is when we have a short signal in a bearish environment, we expect to have the profit targets hit, and sure enough, they're hit right away. After about halfway through the session, the market fell apart, went well through these targets and well below them. Most of the time when people trade the ORBs, they're looking to be out, so you would miss out on any follow-through move after your second profit target is achieved. But Hubert may tell you some ways he's traded it. I know he took some sell signals in the past, or a sell signal that at least I know of, where he was short, he nailed it, it went through both profit targets. He actually decided to hold on to a trade because he felt like there was a swing trade that he wanted to transition to. Now that gets a little more advanced in terms of entries and exits there, but the ORBs in and of itself does provide you with the different levels, obviously, to where to get in, where to place your stops, and then where to get out as well. So making it very easy every time you walk into the trading day. Now, here's an example of a losing trade where we have, on the long side, we have the market rally up here. Our buy entry level was achieved, and we can see that the market did not carry through to the buy target number 1. That is going to happen sometimes. So that's part of trading, and obviously we will expect to have a certain number of losing trades as a trader. And this is where introducing a bias or having a trend following indicator or directional indicator coming into the session can become extremely powerful. Again, you see the buy entry here, and then you see the stop loss level here, the dark blue line for relating back to our long entry level up here. Now, I'm going to go ahead and show you some research that we've done. We actually did about a year's worth of research. We wanted to test and make sure that the results that were coming out of the Compass camp could be validated, at least with a period of testing. This comes from what we call hypothetical or simulated results. These are not actual trades. This is the way any type of strategy is tested, whether you're in the hedge fund world or whether you're a retail trader. But this is basically the results we have over a period of about a year's worth of time. And we wanted to test a number of markets and show you how these results stacked up. Now, whenever you have any type of test, it's important to understand how we're testing. Okay, so I want you to really understand how we get our results today. First and foremost, we only take a maximum of one buy signal and one sell signal per session. So we're not twisting the results around and saying, well, we would have bought on that day but not sold. So we're trying to keep it even and honest, if you will, coming into any given day, even though the reality is I would probably personally use some sort of filter and be trading from one side of the market myself, but we didn't want to introduce any bias into backtesting from that direction. So there's no directional bias. There's no looking back in time and saying, okay, we know that this market was in a strong bull market for the past year, and so let's just only take the buy signal. So none of that in this testing. So we take a maximum of one buy signal if it's generated, excuse me, and one sell signal if it's generated per session. Some sessions don't have two trades. Some sessions don't have any trades at all. Okay. Now, let's see. Next rule is that the buy signal, if it's taken, then okay, buy signal is taken if the buy line is hit. So no, that's just plain Jane as we have the rules there. Our green buy line, if it's hit, the buy signal is taken. If our red sell line is hit, a sell signal is taken, period. All right, there's no funny business there. If the signal's hit, it's taken in the results. Now, if the stop loss is hit before a profit target, then the trade is counted as a loss. That's how our back testing works right now. If the stop loss is hit before a profit target, it's a losing trade. If a profit target is achieved before the stop loss, the trade is counted as a profitable trade. Now, the way these numbers, you have to, with this type of strategy, we have to define a way that we're going to test. So you have to define the rules. What we've done here is we've taken profit target number one. If that's what's been achieved by a trade, that's what we used as our exit point. Not partial profits, not all, it's just all or none. If only profit target number one is achieved. If profit target number two is achieved, then we take those results. We take that as our exit point. Okay, so you understand how we're coming at these results. It's important to understand that trade execution, slippage, and commission costs have not been factored into these results. Now, part of this is for good reason. A lot of times when I tested systems with a hedge fund, I would introduce those costs as a real-world cost, but with this type of strategy, if you have your profit target, you could either make that a market order or you could make that a limit order. So that's really up to you, and that's going to that's also going to affect the profits as well. So that's just a matter of how of what type of order you choose to use at your profit targets. The other thing is it also depends on what type of order you use to enter. So you could opt to use a limit order. And if the market hits it, then I'm going to trade that limit. I'm not going to pay above that entry price. So there's several different ways to trade this. That's part of the reason why we did not include the slippage and commission numbers. Obviously, commission can vary as well from broker to broker, but it's important to understand that. In this particular case, it's my opinion that these do not dramatically affect the results with this simulation test, but it can. Certainly, slippage and commission can have a dramatic effect. I don't believe that on the ORB strategy it's material. Now, let's take a look at some results here. Well, first and foremost, what we did is we tested the currency Forex markets, just similar to what Compass FX did. Now, you can trade the ORBs on any market. You can trade it on stocks. It works extremely well on a handful of stocks. And we're going to share with you at the end what one of our traders has done who's actually purchased the orbs. This guy's so excited about it, he's actually sent like 8 of his friends to buy orbs too, and he's apparently done very well with it. And I'll show you his comment and the stocks that he likes to trade with it. But this can work on futures markets. This can work on stock markets or stocks as well, and Forex. Now, some markets it doesn't work so well on, and I'm going to show you an example of one of those markets today where I would not recommend using the orbs to trade it, just for full disclosure here. Okay, now the first study was done on the Euro-US dollar. These are monthly profits stated in terms of ticks or pips, depending on whether you're from the futures camp or you're from the Forex camp. So you can see here from June of 2012 through May of 2013, every single month using the rules that I just outlined was profitable. All right, so the strategy, the orb strategy, proved to be highly effective. Again, we didn't use any type of bias, we didn't use any type of external filter. This is taking a maximum of 1 buy, maximum of 1 sell, period. A lot of times what people will do is if they have a buy signal that's successful, they'll get out of their profit target, and if it comes back down and holds the open, then they'll take a follow-on buy signal. And many times that ends up being a second winning trade in the same direction. We did not do that either with our results. So 1 trade max on each side, long and short. So the results for the Euro-US dollar were very, very strong. In fact, I would say that's probably one of the strongest markets. And Compass FX, interestingly enough, I think would validate that. Their numbers look pretty strong in actual trading from certain traders who trade that in their camp, from what we've heard. Now, the second market we looked at here is the British pound US dollar. That actually was very consistent as well. You can see going all the way from June of 2012 again through May of 2013. Again, the total number of ticks or pips, 3,900, and then the average monthly was 329 pips or ticks in profit. So not bad at all, proved to be very effective. The US dollar Swiss franc, again, very effective, had a lot of consistent up months. Now, let me just state this. Does this mean that you're going to guarantee to have profits if you buy the orbs? It does not. This does not state that. I'm just telling you what the results were from our test and from obviously the positive things that Hubert and I have heard from the Compass FX camp as well. So you are not guaranteed to make profits, but the results so far in an unoptimized strategy, orbs is not optimized or back curve fit at all, were very positive. Again, with the Swiss franc, we have a total of 3,500 pips after 1 year of trading, average of 298 per month. So fairly strong results. The Australian dollar, US dollar, this is a notoriously challenging market for any type of mechanical trading strategy. You can see that we had a low month here with 42 positive pips, and then we had some months, 68 is fairly low as well, and then we had some really good months like 394. So a little bit more of a variation here, but still the end result was profitable. 2,700 pips at the end of the year, and then average of 225 a month. Now, the Euro-Japanese yen, we start to actually see some negative months. It's important to understand you're not guaranteed to have positive months with this. So negative 59, negative 124. The net result was still positive. We had some positive months that overwhelmed our negative months, but a lot more variation. This is probably more real world to what a lot of people would experience, just so you know that. But again, the euro currency and some of these other currencies proved to be very consistent and good markets with the orbs. All right, let me go ahead and show you some of the graphs here. These are histogram charts showing you the same results. I showed you the table. Now I'm going to show you the results going through from, again, June all the way through May, June of 2012, May of 2013. These are the profits in terms of pips. Now, the reason why I didn't put a money figure there is really twofold. My goal is not to light your greed whistle to think that you're going to be printing money with this strategy, because we all know that the markets are more challenging than that. There's nothing out there that guarantees that we're going to do that. The second thing is it really depends on your position size. So if you trade a larger contract in Forex, then you can make more money. If you trade smaller contracts, you make less. So that really depends on the individual and how you leverage that up. But again, fairly consistent results here over the year in the euro currency. That's what we like to see. The orbs really pass the test on the euro. Again, the equity curve is very strong there, very, very consistent. Now the British pound, a little less consistent, but still all months were positive using our rules. And then again, you can see in the equity curve that it's very smooth as well. Now, US dollar Swiss franc, a little more inconsistent. I mean, for the most part, with the exception of May, May turned out to be a very good month with the orbs indicator. A little more inconsistent here with our results. but overall still very positive, very nice equity curve. And then same thing with the Australian dollar, US dollar, a lot more variation here from month to month. This, in my opinion, is probably more realistic, and not even in terms of guaranteeing profits, but in terms of the variation of what you might expect to achieve. That's been my experience with trading. It's not like a CD where you're guaranteed to make a certain percentage a month, or even guaranteed to make profits at all. It's going to be more of a situation where you're going to have some large months hopefully, and then some possibly some losing months as well. Excuse me. You see the equity curve here, not quite as consistent as the euro, but still very acceptable. Last but not least, the euro Japanese yen here. Now, this is a good point. This brings out the idea that the ORBs is not going to be something that I would want to trade on every market. I may not trade it on the euro Japanese yen cross. I may not trade it on some ETFs. Right? So there may be some markets that I don't want to trade the ORBs on. That's why I would challenge you to go back and do the homework, and run some tests yourself to see if it works well in the markets that you want to trade it on. Now you can see the equity curve here for the euro Japanese yen is not quite as attractive as the other currencies. It may still be acceptable in your mind. The other thing I would recommend that you do is take a look at your charts, understand the environment for the markets, and whether it was a good environment or not to trade the ORBs, and whether the ORBs stacked up in terms of the results that you end up getting when you test these yourselves. Now, I also expanded our test over into some futures markets as well, including, we can see crude oil here at the top. We also did it in gold, 30-year treasury bonds, E-mini S&P 500, and soybeans, last but not least. Now, crude oil had a fairly consistent results. You can see that the futures markets were not nearly as consistent as the Forex. We have a down month here in December, a very strong month here in April, very strong month here in May, and then a very strong here in July 2012. So a lot more consistency here in the futures, but still the end result is 5,000 ticks to the upside. Not a bad deal there, 421 per month. So certainly not bad at all for us as traders. Gold, same way, more inconsistency. In fact, I would say this is probably the most inconsistent market that I've shown you so far. You can see we're down 600 ticks here, up 500 right here, but the net up 1,000 here in April, but the net result still positive. But gold is a lot more inconsistent when you apply the rules every day without a filter. So for the gold market, for me personally, I would probably choose to use a filter. And the interesting thing is I actually ran a test on the side here that I'm not going to show you the results today, but I used candlestick daily patterns, and then I looked at how the ORBs traded after the session in the direction the candlestick forecasted. And the gold results were actually fairly good. Now, 30-year bonds here is, again, fairly inconsistent. This actually, if you look at the charts, matches up with what we saw in the market, because near the topping there, we saw a lot of consolidation, not a lot of volatility for a period of time. So this doesn't necessarily bother me here, given the context of what the market had done, but still positive. So let me shut off my desk phone here. I apologize for that. Still very positive and very acceptable here in the 30-year bonds. Now, the S&P E-mini contract is one that I would say that you should not use the ORBs without some sort of a bias, or without some sort of a filter. I'm not comfortable with these results right here. You have a lot of losing months here in June, July, August. You have another big down month in November. Now, near the end here, we have some positive months that still keep us slightly north of break even. But in my experiences, when I see these types of results, I usually don't achieve the results. If I achieve 80% of what I do from testing in reality, I'm fairly pleased. In this particular case, we're so close to zero. We're just north of being unprofitable. So I would say in that particular case, you may want to opt not to consider trading this in the S&P, at least not without a filter. Soybeans actually tested out fairly well. We did have some losing periods here. We had some very strong winning periods as well. August was strong. October of 2012 was strong as well. The total very acceptable, 4,800 essentially ticks up with an average of 402 a month. So very, very acceptable. And the ORB certainly proved to test out fairly well. This is a good picture, in my mind at least, of the variation that we can see as traders. So unlike the euro, which was very, very smooth in terms of the profitability each month, this is a situation where it's probably more realistic. You have some down months in here. And this is not even to say that we're guaranteeing that you'll make money longer term. We obviously hope that'll be the case, we wouldn't be telling you about the ORBs strategy unless we thought that it had a fairly good chance of doing well for you. But having said that, I like this chart because it shows you real-world trading. It's not always going to be big winners. You're going to have some variation here as well. Could have some down months as well mixed in, some flat months as well, and that sort of thing. So don't get the idea in your mind that you're going to achieve some sort of consistent results guaranteed. That just doesn't happen that way in my experience. But at the end of the day, well, obviously more good news than bad news on this hypothetical study, and the end result I think is a very acceptable equity curve here. So that's an acceptable end result, 5,000 ticks profitable after a year's gone by. Now this makes me more nervous. I mean, I'll tell you, just with blindly, I would not trade the ORBs on gold because you have a lot of variation here, and then in your results, and then obviously a big down month in August, and you have obviously a huge up month here in April. But if you go back and look at the context, we were having some more or less very unusual large moves in the gold market that may not necessarily be consistent with the normal. So I would say if you trade gold, you may want to consider using a some sort of filter, like a candlestick pattern filter or a directional trending filter as well. Can be very powerful. Also, you may want to look at support and resistance levels and things like that. So there's a lot of really powerful things you can use, but I would not use this blindly the way we've tested this to trade gold. That's just me. Now, gold equity curve, again, it's still profitable, but the thing that makes me a little uncomfortable here, with full disclosure, is that the end of this period in gold represented really kind of an historic period. So we don't want to count on that being replicated going forward because it probably won't be on the average in the average scenario. Now, this is performance results for the 30-year bond. Again, very unpredictable, I should say, or at least in terms of results, they're not necessarily consistent or a little inconsistent. But this doesn't bother me right here. We're holding close to even there for a couple months and then go back. So this, even though we didn't make much money in the 4-month time frame from December of 2012 to March of 2013, this was actually a very acceptable performance result for me. I would trade the ORBs on bonds without a filter. But again, I believe that everything can be improved with an effective filter. So this doesn't bother me. Look at the context of the market. It consolidated. There wasn't a lot of volatility, and so that's the end result. We didn't lose a lot of money. We didn't make a lot of money there. Okay, now this was the worst result we had by far. And the S&P 500 just chopped around. A lot of losing months here. First 3 months out of the gate were down, and then we had 3 more months in the middle that were all down. So this is something where I would say that I would not recommend trading this without a filter with the S&P 500. With a filter, certainly can become very powerful, potentially, depending on the filter that you use and how effective that is. But cold turkey without a filter, I would not recommend it. These results don't make me comfortable at all to risk any kind of real money. Even though that we're saved at the end by some performance results, the reality is we will probably not even achieve this, this, maybe 80% of this if we're lucky. That would put us down into negative territory. So don't trade the ORBs in the S&P 500 without some sort of effective filter. Soybeans, again, you see variation in the monthly returns, and we don't have a problem with that. I think overall it looks fairly good. You had a down March here where you lost 451 ticks, but overall the up months were much greater than the worst down months. I'm comfortable with this. These results are very acceptable, and they're just good real-world results. Again, communicating that we are going to have some types of variation in terms of returns, and even then, with everything that I've shown you, these are the results we've received or achieved ourselves. I shouldn't say received, achieved with our simulated tests. So it's important to understand that. But this was over a finite period of time, a year, from May, again, of 2012 through May of 2013. So that's just one period of time, and this is what our results were. Now, Hubert, I don't know if you want to step in here and show some examples, or if we want to talk about this quite yet, but Hubert should jump on here in a minute. One thing I want to tell you about, though, is we've had the ORBs.
There you go, guys. So what I'm going to do is I will show you.
smartsetups.com/pub. We have reduced the price of this and the bonus power ORBs workshop down to essentially almost 50% off. So if this is something you're interested in, then we have almost a half price special, not quite half, but a little bit above that discount you can take advantage of. Do not go to the Smart Setups website directly. You will not receive this discounted offer here. You need to go to smartsetups.com/pub to receive this landing page with the discounted price you see here. Now this includes the indicator you saw. This has been built out for Thinkorswim, TradeStation, NinjaTrader, eSignal, and Sierra Chart. So we've got it across a number of platforms. And then in addition, if you have more than one platform, then we'll give it to you across more than one platform. So if you buy it once for yourself, with the honor system here obviously, then you have the ability to actually use it across platforms. The other thing is this comes with a training course called the Bonus Power Orbs Workshop, and that is thrown in there with this bundle. So you actually get a discount on the indicator itself, and then you also have the ability to get the recorded workshop as well. And here's what the workshop comes with. It comes with the Orbs Trading Fundamentals. It comes with Orbs bar settings. How do you set it up? Live trading examples here as well, and then the question and answer period that we've had recorded on the workshop. You can hear what a lot of other people have asked. Again, this is available free of charge. We're throwing this in the mix. A Bonus Power Orbs Trading Workshop as well. Okay, now what do people think who have actually bought this indicator? What do people think who have actually purchased this? Well, this is a great story. This is a guy named Tony. He says, I use the Orbs daily on the same 8 stocks. Now, believe it or not, I actually went back and looked at some of these stocks, and my results were very good as well. I used a little bit of a different filter than he does, but he's actually referred a number of friends to buy Orbs themselves as well. And then he has fine-tuned his Orbs strategy to include a number of stocks, a total of 8. Those are all the symbols up there. Tesla, Apple, Baidu, Netflix, Facebook, looks like Google, Twitter, LinkedIn. So those are the stocks that he settled on, and that's what I'd recommend that anybody who looks to purchase Orbs do as well. So check the markets out that you like to trade, see if it matches up, see which ones it works the best on, see if there's filters that can be used to improve upon it, and take advantage. So that's that's a great story there. And then there's a lot of other people who have purchased the DOTS indicator for Forex that out of the Compass FX camp, and have had apparently good success with that as well. It's a great way to set up a framework to approach trading, and that's really where the power comes in. Hubert, you want to take over and show your screen or talk here?
Sounds good, Mark.
Okay.
I will, sure will. All right. So if you can hear me, just give me a visual yes here.
I won't talk over you, Hubert. Go ahead.
Okay, cool. All right, so what I'm going to do is I'm going to show you live charts. I'm going to show you how I actually use this thing to make my trading a little easier, and how it's helping a lot of other people. So before I do that, I'm going to go over here to live charts really quickly. I just have to share my desktop, so I'm going to start sharing desktop. And sometimes my computer and Omnovia hate each other, so I just got to make sure I don't do anything wrong. So as I'm waiting for this projector to load here, hold on just a second. There we go, monitor. I want it to be monitor 6. Let me know when you can see my screen, if you don't mind. Can you see my screen? I don't know what you can or cannot see, so it's a little weird there sometimes. So you should be able to see my screen. All right, you good to go? All right, I'm going to make it larger. So the story behind ORBS, which stands for Open Range Breakout System, I'm in a mastermind group with Scott Madden and oh God, I forgot her name. Kim Pinkleton. I almost forgot her whole name. So they had a system that they had internally, and they call it DOTS, and it's just for MetaTrader 4. They didn't have it developed for anything else. And they were wearing me out, going, "Hey, we're really making a lot of money over here internally. We're going to release it to some of our customers so they can make more money and stop losing money." I'm like, "Well, that's good. You know, all systems eventually fail, so it's not a big deal. Like, yeah, just keep me in the loop, right?" And then they wore me down after about a year, and they said, "It's still working, dude." And then after 2 years, they're like, "It's still working." They're like, "Why don't you develop up something like this to help the futures community and the stock community and the options community? Like, we'll keep it for Forex on MetaTrader 4. You just go develop it on everything else." So I'm like, "All right, show me what you got." And what they had is they had a lot of their user database, since they own a Forex company, and they could see if their people were making money or losing money. Now, they don't really care because they make money on both sides because they're a Forex broker. But the longer the people last, the less they have to fill the hopper and go get new clients. Makes sense, right? If the longer your people trade with you, the more commission money they're going to make, the more money they're going to make off of them on the commission side. So it made sense to help them learn how to trade better. So they showed us what they were doing, and then we had a little pilot program where we gave it to some people and said, "All right, test us out, see how you like it." We had Mark test it, and build it out and put a couple other sweet features in there where if it's in a daily uptrend, the targets to the upside are expanded and the targets to the downside are a little bit smaller. And you can kind of see this, right? So you can see that the Dow is in the daily uptrend. You see how the target, this is your entry, target 1, target 2. You see if it went short, the target 1 and target 2 here are a little smaller. So it's really, really simple. It's a very simple solution to an elegant and difficult problem to deal with. So on the first thing, what I do is I always filter it out with Ichimoku. And you guys know I'm a huge fan of Ichimoku, so I want to know first, on a daily chart, am I above or below the cloud? Okay? So I want to know, all right, if I'm in a long trade here, which the Dow's still in an uptrend, I think it's running out of a little bit of gas personally, but it's still in a daily uptrend, right? So then on the 6 o'clock open here, and there's two different ways you can do it for futures, okay? This is going to give you the buy at 16,192, and then all I have to do is I'll buy it here. You could buy it right here, right prior to the breakout, and then my stop loss on the buy is very easy. It's the blue line. If I short it, my stop loss is the purple line. And then all I'm going to do is this is my entry. There's target 1. There's target 2. Now, let's talk about this being an intraday system. It's not a system. It's a strategy. It's not going to automatically trade for you. Yeah, what Elon said there. Exactly. I totally agree with him, what he just typed there on the screen. That's awesome. You could sell a half at 16,243, and then you could sell, I have no idea what you typed. And then you could sell a quarter at 16,291, right? And then you could hold a quarter for a potential move up higher. Does that make sense? So if you're in, no, number one, this is a trending system. It's called an open range breakout. If the market's sloppy and choppy, it's not going to work. Nothing works in a sloppy, choppy market. Nothing does. Nothing. Only thing that works are fade trades off of tick extremes or tick support and resistance. Okay, so that's the YM. Let's take a look at how it fared on. Oh, how did it fare? Well, I can back up here from time. I use it on a 5-minute chart. That's what I like. So yesterday it fired off a short here, target 1, target 2. Today it fired off along here, target 1, target 2. I'm just going to expand it, and you're going to see whether it's going to work or not on your market on today's action, whether it works or not. Now, it's going to look really good on a lot of stuff because a lot of stuff was up, right? So let's take a look at ES. Wait a minute. Before I do this, this is at YM, okay? So on at YM, let's go at YM.D. So if you're going to just trade this thing at 9:30, you're not going to have as good as a feel on it, right? Because if you're just going to trade the 9:30 open, well, you had a long here, you had a stop here, and you had a target here. The entry and the target got hit, but you didn't get in as a cheaper price, right? Is everybody following around? So the first and foremost thing what you want to do is, are you in a daily up or downtrend? If you're in a daily uptrend, you want to buy breakouts to the high side. If you're in a daily downtrend, you want to short things to the low side. If you're in a sideways consolidating market, sit on your hands and don't trade. How does it deal with gaps on stocks? Same way it's going to deal with it like it's dealing with it on the futures right here. So let's take a look at the ES. Let's go at ES. Okay, so this is going to be Globex, so we're going to shrink it down. So then last night, when Globex opened, right? So how did it perform? How about perform? How about I learn how to talk English? So last night when the ES opened up, you can see the ES sold off. Boom. Breakout to the high side. Target 1, target 2. Real quick trade. Okay. So all it's doing is taking a look at the average true range of the previous days, calculating whether it's in an uptrend or downtrend. If it's in an uptrend, it's going to give you bigger targets to the upside. If it's in a down, and it's going to make the downside targets smaller. And then you just have to figure out how many trades per month on average. There's a trade every day. You just have to decide if you're taking it or not. Number one, if you're in an uptrend and it gives you a down signal, you're going to pass on that one, right? Don't do the counter trend signals. So on the ES, did it work? Yes or no? You could have did target 1, target 2, and then you could have kept a runner for the last part of today. Let's take a look at the NASDAQ at NQ. Okay? NASDAQ breaking out. Obviously it worked. Everything's up. This is going to look great today. It's up here. Target 1, target 2, hold it. Let's take a look at it as at ES or at NQ.D because that'll give you the 9:30 open and the 4:15 close. Well, in this situation, it's a little worse, right? Because if you didn't get in on the Globex session, well, you bought here, you didn't get stopped out, but you're still in the buy and your exit hasn't taken place. Let's take a look at the Russell at TF. I would call the Russell in a valid uptrend. Would you agree? That looks like a valid uptrend to me, right there. That looks good. That's long. Everything looks good. That's a long. No matter how you slice it, that's a long. So then how did the Russell on the 5-minute on the Globex session perform? Well, it got you in here, out here, and you kept a quarter for the runner. Let's just say if we got at TF.D, okay? At TF.D, a little bit different because you're entering at a different time because you wouldn't have started until 9:30, but you still entry 1, exit 1, target 1. Entry, target, target. Somebody asked about crude oil at CL. Here's how it looks for crude. I would say crude is in a daily uptrend. I just have to cram my stuff back here. So this is a really good example for what to do in this situation. So do you believe crude right now is in an uptrend or a downtrend? Based upon the chart on the left. Is it an uptrend or a downtrend? I would say it's in a minor uptrend, right? So if it's in a minor uptrend, but we got a sell signal, would you take that? No, you just say, oh, okay, Orbs fired off a short. I really don't want to mess with that today because I still have crude oil in a major uptrend or a minor uptrend, so I'm just not going to play ball with it today. But now here's the sticking point. Did it give you a long signal today? No, it didn't do that either. It said, okay, it's going to sell off. Now, if you were crazy enough to do it today, you would have made money, but you'd be crazy to do that with crude oil on a major uptrend. Yeah, and the past 2 days have been a little iffy, right, with the Ukraine and the Putin stuff going on. So it's been crazy market fluctuations, momentum. That's good for open range breakout. So somebody asked about Tesla, TSLA. Let's take a look at Tesla. Tesla obviously is in a massive bull market. It's up. It's a cult stock. So on Tesla, you would only go on longs only. So yesterday it worked good. Today you did not get a signal for Tesla. Okay, but yesterday it worked really good. Target 1, so you entry, target 1, and then boom, target 2, and then you hold the rest for another nice little run. So here's what I'm going to do. You throw me out your stocks or your futures or your indexes, and then we'll take a look at them, and I'll show you how this thing works. Okay, so QQQs is going to be the same thing as NASDAQ. The QQQs is obviously in a valid uptrend. Looks like it's running out a little bit of gas, but it was a good long today, and the exit one has not been hit yet. Okay, Facebook. Let's take a look at Facebook. So Facebook is in a valid uptrend. Yesterday it signaled off a long and target 1. The day before it had a long, it got stopped out, and then you had a long and then stopped out, and then I'm running out of data here, but that day would have been it. Let me back up really quick. So here's a little trick you can do with this. So I want to format this, and I just want to make sure that I am in fact do have enough days to go back. So what I want to do is go right click, and I want to go format my window, my symbol. This works on a lot of things. It works on TradeStation, Thinkorswim, TOS, Ameritrade, eSignal, Sierra Charts. I'm going to go 300 days back. That'll give me enough data that it'll calculate for me. There we go. So now here you can see how it works on Facebook. So here's long, target 1, target 2, long, target 1, target 2. There was no long. It was a short. You pass. Here's long, target 1, target 2. Here's a short. You'd pass. Here's a long, stop out. Here's a long, stop out. Long, stop out. So Facebook's starting to roll over. So you made money there. You're giving a little bit back there. Let's take a look at something else. Natural gas. Be careful with natty gas. Natty gas is just hard to trade in general. That's a widow's maker. Natty gas, I would say it's in a valid uptrend, but the past 1, 2, 3, 4, 5 days it's been sideways. Today in natty gas, it was a buy signal. Well, the chart just freaked out on me. There it goes. Let me refresh my data real quick. Today on natty gas, it was a buy signal, and you hit exit 1. You're going too fast for me. CMG. Put CMG in here. I would say CMG is a valid uptrend on the daily. So let's take a look and see how CMG acted over the past 4 or 5 days here with this. So entry, target 1, entry, target 1, target 2. You would have been stopped out on the second one on this one. Here's entry, target 1, target 2, and then it rolled over. Here there was an entry. You'd have been stopped out on that one, and today you had entry, target 1, target 2. So I don't want you to think that I'm blowing smoke up your rear end or making everything look like sunshine and roses, like it always works. It does not always work. It works really good on lots of stuff. And if you're smart enough and you have enough common sense to just say, okay, I'm going to follow the trend, then what this does is this gives you a trading plan for every day. And you can say, okay, I think that Priceline's in an uptrend. So PCLN's in an uptrend. I want to only buy breakouts to the high side. Okay, where would I want to do that? Well, I'd want to buy at 1356, and I want to exit some at 1363, and then I want to exit some at 1370, right? Let's do a look at currencies here. Somebody put some currencies up earlier, I saw. If you'll re-put them up, they're just going by a little quick for me. Will all the levels be plotted the same level prices regardless of the chart time frame? They should be, yes. EC, let's just go at EC. Add EC, and then we'll do British pound, US dollar. So that's a valid uptrend. So I would stay away from the short side, but you can see that it did have a buy signal here, and target one was hit, and then you got stopped out. Let's go GBP USD. Okay. So that's a valid uptrend. So that would be a long. So that's a good example. You've got yesterday you had a long, target one hit, and then now it's resetting right now because the market just closed. So last night or yesterday you had long, target one hit, and then stopped out on the rest of it. EUR UAD, EUR AUD, Euro Aussie. That's a valid uptrend. You got a long today, but where did you get a long? You got a long here, but you haven't been stopped out of it yet. Just be careful, you're right there on the cloud. That one's just a little iffy, but it still looks decent. Let's see here. Why not develop a system that trades the breakout of the actual opening range of the trading, be at 5 minutes? Seems that's defined today's open range, yesterday's market. You can definitely do that. There's nothing wrong with that, but most people don't have the stomach for just automated systems. So what this does is this gives you lines on the charts. It's kind of the best of both worlds. So you can actually adjust it, and you can say, okay, I'm either going to buy this or sell this there. So let's go Netflix. Any other stocks or symbols you guys want me to look at? So Netflix would be a valid long. You can see you had a buy on it today with a target of 456 and also 459. CECO, there you go. CECO. CECO is in a valid uptrend. The past 3 days it's been in a downtrend. Yesterday it was a long, target one and target two met. Today it was a long, you got stopped out. Day before, it was a long, target one and target two met. Day before, long, target one and target two met. So it works really good on that. What time frames are charts? So for me, I always scan everything. I filter everything through a daily trend. So you want to make sure you're in a daily uptrend or downtrend first. And I don't really care what you use it as a filter. For me, I use Ichimoku. Okay. For you, maybe you use parabolic SCR. Maybe you use moving averages. Maybe you use trend lines. I don't really care what you use. I just want you to be consistent with it. And then I use a 5-minute bar. I like 5-minute charts with dots. It makes, or I should say dots. I should say ORBs, Open Range Breakout System. It just makes my life easier. I don't have to think about so much. So LMT, one of my old favorites. So I would say LMT is in a valid uptrend. You can see it's uptrending stock. It sold off for 2 days, and now it's bouncing back. So for LMT, here's somebody asked earlier, how does it handle gap ups? Well, in this situation, it gapped up. We opened up. You'd be a buyer at 165.08 and a seller at 165.92, and then you got a next target at 165.82. What about ZB? So I'll just go at US. That's the same thing as ZB for me. So on bonds, you're in a valid uptrend, but today you sold off really, really hard. But you're still in a valid uptrend on the daily. And today I was trying to short bonds, and I could not get it to even bounce back 16 ticks for me, so I couldn't even get in. I tried it like 3 or 4 times on an 8-tick reversal. I'm trying to get to the bond market here. So in the bonds, it works good as long as you use a filter mechanism for that. There we go. Now I can forward there. But today's action, you had a sell-off, so sell, target 1, target 2. Yesterday, you had an entry long, target 1 was hit. So, yeah. How many pips per day? It just all depends on what's going on. Is Ichimoku on TradeStation? Yeah, Ichimoku's on just about everything out there, so yeah. So any questions on how I go about using it? So the first thing I'm looking for is, are you in an uptrend or a downtrend on Ichimoku? GDX, is that gold? GDX? Not sure what that is. Yeah, it's gold miners. I would use gold instead of the gold miners. That's in a valid uptrend, so you would ignore all shorts and only go long. Let me forward it over here to you. Okay, so today it was a long at 26.12. Your stop has not been hit. Next target 26.28 and then 26.45. I would always just compare everything to gold when you're talking about gold, and stay away from gold miners because Gold miners have to physically get that stuff out of the ground, and sometimes they're not the greatest things in the world getting it out of the ground and finding it. How do you use it with gaps? Many times gaps get filled, so do you filter that out? No. Well, mainly what I'm looking for, if it's not a huge gap, I won't filter it out. On a lot of stuff, hopefully you're in that gap already from a valid uptrend. So if you're doing something that is running for you to the high side, and you're doing an open range breakout because you know it's in a daily uptrend, and you're buying the daily open range breakouts, and then you have a piece for that, you hold it overnight, and then once it gaps up, you can flip out into it. If using orbs on stocks and working with options, what expiration would you work with? I would start out with weeklies, but then I would go a little further out than that. Yeah, because open range breakouts with trends continue to run a little harder. How do you use gaps? I got that. Jerry Q, I did a system similar to this and uses a fraction of ATR. Since the ATR is auto-correlated from one day to the next, it works fine to use intraday action. Yep. TNA, ABX instead of gold or GLD. I would do just straight up GLD or GC as opposed to ABX or GLD. They're going to work a lot better for your analysis. What time frame open on Forex? Usually it depends on the Forex market. So if we go at EC, this is going to be the currency future, and you can see this is going to be the open at 6 o'clock. So watch this. Boom. So this one opens up at 6. There you had a sell signal. Here you had a buy signal, target 1, target 2. Same thing for like EUR, USD. It's going to be, in most cases, the Asian session, I believe. So here, yeah, you can see it opens up at right at 17 or 1800. And you can see here you've got a valid uptrend, so you'd be long 1, target 1. All right, there is the link. I know they've got it up for you. Any questions for me? Anything else you guys want to see? So the price is $9.99, and that's a 50% discount off of the normal price as a thank you to Morgan for having us. Let me see here. On Big Mike Trading, there's a user who developed a set of indicators, fat tails, that calculate the volatility projections of opening range levels. Really, I question you need to buy your levels for round 3. Where can we get similar widgets? Great, that's awesome. Let me know how it works out for you. Any trial period? There are no trial periods. It is, but we do have a refund policy. If you don't like it in the first 30 days, we'll give you cash back. What time zone are you referring to? I'm usually on East Coast time zone, so yeah. So let's take a look at a couple of markets here. Go at C. I want to clue you on a few things that you should be in if you've never traded them before. So let's take a look here really quickly at the corn market. So, New York time. The commodities market are in a brand new, fresh bull market. If you're not in them, you're going to be left behind, and you're going to cry like a little baby after you see how much money you could have potentially made in the commodities market. So take a look at this parabolic move in corn today. Now, I've been talking about corn for 4 or 5 days now, going, hey, you need to be in corn, you need to be in corn. It's above the Ichimoku cloud, it's going to run. And now notice what you can do with the commodities with the open range breakout. Long, target 1, target 2. You hold it the next day, runner, hold it the next day, winner, chicken dinner. So you can see entry here, stop out, boom, entry again, target 1, target 2. We're going to focus on the long side. Also, take note of a couple of other commodities that are going crazy that you need to be in. Now, if you've never traded corn futures, not a big deal. Use this. Use DBA, which is an ETF on the agricultural products. You see how it's moving to the high side? You see over here on Orbs how well it's working, breaking out to the high side. So this is a very good upward trending market, breaking out to the high side. It's DBA. This is agricultural futures. All right, so it's going to be corn, soybean, wheat, all that good stuff. Now, if you don't want to do the DBA, which is an ETF, you can also do CORN, which is a corn fund. CORN is a corn fund. You could also do that, okay? So take a look at that. Last but not least, let's take a look at coffee. Coffee is in a parabolic move. Take a look at coffee. It's went from 120 basically up to 190. Looking really, really good. You want to focus on either DB, corn futures, corn fund, or you can take a look at getting long some coffee. The blue dot is a parabolic SAR. That's what the blue dot is. Are these drawn back from the future ETFs because of the? Yeah, they are. So on the DBA though, and a lot of people just don't like trading futures, so I'll recommend an ETF to them. But just know, Wall Street's not going to set up anything that's really good for your. It's not going to be really good for your P&L the way they settle things out. So just be cautious. Am I the only one that thinks Am I the only one here that think Wall Street lies to you and sets up the game for you to fail in the first place? So I'm not a huge believer in conspiracy theories, but when the way they settle ETFs, super double long, double short ETFs, it's not set up really to your advantage. So you do need to know what you're doing with those things. But if you buy something at 26 and it goes to 29, you're going to make some cash on that. So the overall trend. Parabolic SAR, yes, that is correct. Would be this little blue dot down here is what I'm looking at. Yeah. Groupon. GRPN. Let's take a look at Groupon. So Groupon isn't a valid short. I would only go short that. So I would throw out all long signals and only go short on Groupon. The best trade you had on it over the past 3 days was 3 days ago, and then you also had one 2 days before that. So out of the past 5 days, you'd only had 2 signals on that one. Yeah, you got it. All right, so there is the link. Morgan, thanks for having us. We really appreciate it. I'm going to give you the link one more time. You can go to smartsetups.com/pub, smartsetups.com/. Does the indicator know what time to start depending on the market? Yes, it does. It is smart like that. Thanks as always. Above the cloud is bullish, below the cloud is bearish. That is correct. Yes, you got it. You sure do. How does this affect options? What, Ichimoku? Ichimoku is a really good indicator to use with options. Thank you. What about gold? Gold it works really good on. I use it on gold a lot, so it works really good on gold. TRIP. Take a look, make sure I got it in there right. TRIP is breaking out. It's broken out, 20 days ago, so it's going to be long only. Look like it's working like gangbusters today. It worked yesterday. It worked halfway day before yesterday. Day before that, there was no signal. Day before that, there was a signal, but it stopped you out. Day before that, it worked wonderful. So yeah. Ichimoku, yes. Is this webinar being recorded? Yes. Is the Ninja indicator written to work with Ninja scripts, trade levels exposed? Rick, that's a good question. I don't know the question to that, but we could find it out for you. Yes. What version of TradeStation am I using? I'm using version 9.1 update 22. Can you backtest the indicator in TradeStation with your strategy? I don't think all of the code is exposed for that, Steve K. Unfortunately, no. Yeah. All right, guys. I am out of here. I'm going to turn it back over to Morgan. Thanks for having us. We really appreciate it. There's the link, and look forward to seeing you on the course.
Thank you, Morgan, as well.
All right, great. Thanks, Hubert. Thanks, Mark. We appreciate you guys being here. And again, the link to access this is smartsetups.com/pub. Hubert, what platforms will it work with? Will you run through that one more time?
Yes, it will work on TradeStation. It will work on Thinkorswim, which is TOS. It will also work on Ameritrade, which is TOS. It will also work on eSignal. It'll work on Ninja, and it'll work on Sierra. Now, one thing about this indicator is we call it an indicator. It's like a mini system, right? So it'll work on Ninja also. Yep, you're good to go. TD Ameritrade. It is a multi-PC license, so you can put it on your work PC, your office PC, and a laptop. Also, if you have TradeStation and Thinkorswim or TOS or eSignal, you can put it on all 3 of those. So it's a multi-PC, multi-charting license. So we're not going to charge you $9.97 for TradeStation and then $9.97 for eSignal and $9.97. It's all in one license. Okay. So here's the deal. So it's $9.97. You get all the courses that come with that, which Mark has already told you about. It is a per user license. Yep, it is. I mean, if you're trading with a trading partner right beside you, obviously you can do that. Or if you're trading beside your wife, that's a different story, right? I do know several husband-wife teams. How about using clouds with Renko charge range? Cloud charts are designed to be used with candlesticks more often than not, so make sure that you do that. How long is the price available? We'll keep the price available probably until midnight tonight, and it's only for the first 100 slots, obviously. And good luck trading, guys. Really appreciate you guys having us, and we'll see you on the next one.